Are you too making these 5 mistakes while buying health insurance? You may end up regretting them heavily at the time of claim. It is around 11:30 at night. Everything at home is going on normally. No one had even imagined that suddenly a sharp chest pain, a fall, a fever, or the need for an emergency surgery could shake the entire family's financial calculations. First the ambulance, then the hospital, then the admission desk, then tests, then the doctor, then the estimate. And then comes that moment when someone quietly asks, "You do have insurance, right?" This is the moment when many people do not breathe a sigh of relief. They panic. Because they do have a policy, but they have not taken the right one. The paper is in their hand, but the cover is incomplete. The policyholder's name is there, but at the time of claim, rules, waiting periods, sublimits, disclosure, and exclusions come forward and completely change the picture. The real fear begins to feel less about the illness and more about having chosen the wrong insurance. In today's life, health insurance is no longer an extra convenience. It has become part of financial survival. The pressure of medical cost inflation keeps rising continuously. According to Willis Towers Watson's 2026 Global Medical Trends Survey, the medical cost trend in Asia Pacific was estimated at 13% in 2025 and 14% in 2026. The direct meaning of this is that treatment costs are not just rising, they are rising fast. In such an environment, if the policy is not chosen carefully, then poor financial planning before illness and out-of-pocket expenses after illness together can push a family into severe pressure. The problem is not that people do not buy health insurance. The problem is that many people buy the policy like a product instead of understanding it like protection. Someone told them through an agent, so they took it. Someone got a policy through the office, so they trusted that one. Somewhere the premium looked low, so they assumed it was the best. Somewhere the advertisement looked good, so they assumed the claim would also be smooth. But the real face of insurance is not seen in the brochure. It is seen at the time of claim. And at the time of claim, those very small careless mistakes that people ignored while buying the policy turn into very big problems. The first and most common mistake is choosing a low sum insured. Many people, in an attempt to save premium while buying health insurance, choose such a cover that looks fine on paper but falls short during real hospitalization. They think that a cover of 3 lakh, 5 lakh, or 7 lakh will be enough because the bill can't possibly get that high. But today, in private healthcare, in situations like a major surgery, ICU stay, multi-day hospitalization, a cardiac event, cancer-related treatment, or a complicated infection, the bill can rise very quickly. Health insurance should not just mean hospital entry. It should mean hospital bill absorption. If the policy's sum insured is weak, then insurance gives only symbolic relief, while the real expenses come out of your own pocket. This is exactly where many families end up breaking their savings despite having insurance. The mistake of taking low cover is also dangerous because the hospital bill is not limited only to the operation charge. It includes room rent, nursing, ICU, diagnostics, specialist consultation, pharmacy, consumables, pre-hospitalization, and post-hospitalization too. Many policyholders live under the illusion that if there is insurance, everything will be covered. But the truth is that if the sum insured is small, the policy can get exhausted quickly and then the remaining expense has to be paid out of pocket. Especially in metro cities, in private hospitals, in the case of senior citizen parents or lifestyle-related illnesses, underinsurance becomes a very big risk. The purpose of insurance should not be to save premium, but to save you from large expenses. The second big mistake is not properly reading the terms of the policy document. This is the mistake that becomes the quietest, yet most dangerous, road to claim rejection. Many people look only at the premium, brand name, and sum insured, but do not read the waiting period, exclusions, room rent cap, co-payment, deductible, disease-specific conditions, and modern treatment limits. According to 𝐟𝐨𝐥𝐥𝐨𝐰's health insurance guidance, the waiting period is clearly specified in the policy, and under the current framework, the maximum waiting period can go up to 36 months. That means assuming that you bought a policy today, and everything will automatically be covered tomorrow if an illness appears. That assumption is wrong. This is where many people get their first shock at the time of claim. They think that the policy is active, the premium has been paid, so treatment will automatically be payable. But then they find out that the illness fell within the waiting period, or this specific disease had still not entered coverage, or time was still left for a pre-existing condition, or a proportionate deduction may apply because the admission happened in a room category beyond the allowed limit. Even in the FAQ of 𝐟𝐨𝐥𝐿's standard product 𝐼𝐨𝐥𝐿𝐴, the example of room rent and ICU sublimits is clearly shown, such as room rent up to 2% of the sum insured with a maximum of 5,000 per day, and ICU charges up to 5% of the sum insured with a maximum of 10,000 per day. This is just one standard product example, but it is enough to understand that choosing insurance without reading the policy wording is like signing a contract without knowing the rules. Just think. You bought a policy after seeing a lower premium. Then, at the time of hospitalization, the family chose a better room because at that moment comfort and urgency felt more important. Later, during claim settlement, the insurer said that the chosen room category was above your policy limit, so associated expenses would be proportionately affected. At that time, the anger comes at the insurer But the real mistake happened when the policy was bought. In insurance, the biggest risk is not that the company is clever. The biggest risk is that the policyholder becomes confident with incomplete information. Incomplete information always proves expensive. The third and perhaps the heaviest mistake is hiding pre-existing diseases or medical history. Many people think that if they disclose diabetes, hypertension, thyroid, asthma, fatty liver, previous surgery, tobacco use, obesity, ongoing medication, or some chronic condition, then the premium will increase or the proposal may get rejected. So while filling out the form, they mark many things as no. At that moment, they feel they have made a smart move, but at claim time, that same smartness turns into the biggest trap. RDI's policyholder guidance and FAQs clearly say that pre-existing diseases must be disclosed, and disclosed pre-existing diseases may be covered after the specified waiting period in the policy. And the Master Circular also clearly states that continuous coverage and correct disclosure are central to protecting the interests of the policyholder. Health insurance runs on trust. You gave the insurer the correct picture of the risk, the insurer set the terms, you paid the premium, and then the contract was formed. If the beginning itself is based on wrong information, then at claim time the company can detect the discrepancy by checking medical records, doctor notes, diagnostic history, pharmacy trail, past consultations, and hospitalization records. In the age of digital health records, lab reports, and treatment history, hiding illness has become far riskier than before. Some people think nothing happened before, so it will go on fine ahead as well. But insurance claims often get stuck exactly where the connection between an old illness and a new illness is investigated. If the insurer feels that a material fact was hidden, the matter can go into dispute, delay, or even rejection. There are some reliefs for policyholder protection in RDI's latest framework too, but they are not a substitute for honesty. According to the 2024 Master Circular in health insurance, after 60 months of continuous coverage, the moratorium period applies, and after that, contestability on the basis of non-disclosure or misrepresentation generally becomes limited, except in cases of fraud. This does not mean you can hide anything at the start. It means that long-term honest continuity works in the policyholder's favor. In insurance, shortcuts do not work. Continuity and transparency do. The fourth big mistake is relying only on office group health insurance. Group cover provided with a job is good, convenient, often covers family too, and onboarding is easy. So people think that if the company is giving insurance, then why is there any need to take a separate personal policy? But on RDI's group insurance page, it is clearly written that your cover can cease when you leave the group, and after leaving the group, the insurer should offer continued coverage under an individual policy. That means employer-based cover is not a permanent personal financial shield. It is an employment-linked facility. Now imagine that situation where a person at the age of 35 to 40 thinks that company insurance is enough. So what is the benefit of taking a personal cover? Then the job changes, a layoff happens, the startup shuts down, early retirement comes, or a health issue appears exactly at the moment when the continuity of the corporate cover is breaking. That is where the damage of not already having a personal policy is understood. Because as age increases, premium rises, the possibility of new disease increases, underwriting may become stricter, and taking a policy with certain conditions may become difficult or more expensive. The protection that could have been taken easily at the 30th of may become a difficult bargain at 50. There is another disadvantage of relying only on office cover. You begin to live under the illusion that you own the policy. In reality, the master policy belongs to the group, not the individual. Many times the employee knows only a broad summary of the benefits, but does not know the real terms and conditions, exclusions, and the depth of portability options. As long as everything is fine, this does not feel like an issue. But as soon as a major hospitalization, job exit, maternity need, chronic disease, or the need for parent coverage appears, the limits of the group plan become visible. That is why, in smart financial planning, employer cover should be treated as a bonus, not as your base protection. The fifth and very dangerous mistake is deciding only by looking at the cheapest policy. Many people shop for health insurance the way they choose a mobile recharge plan. Low premium, high sum insured, and deal done. But in insurance comparison, not only premium, but also claim process, network hospitals, room eligibility, co-pay clauses, disease-wise caps, restore benefit conditions, exclusions, service responsiveness, and grievance handling are equally important. RDI has emphasized policyholder communication and transparency, and has also prescribed a turnaround time of 1 hour for cashless pre-authorization and 3 hours for final bill authorization for insurers. Having the rule on paper is a good thing, but it is equally necessary for the policyholder to understand that claim experience can differ from company to company. A low premium policy is sometimes cheap because it has a tight room cap, higher copay, restrictive restoration conditions, limited daycare coverage, or sublimits on some important treatments. Many people become happy after seeing the premium, but at the time of claim they discover that the policy transferred less risk and imposed more cost sharing. That means, at the time of illness, both the insurer and the insured are sharing the expense, but the policyholder was either never properly made to understand this or never tried to understand it. That is why, in insurance purchase,
The cheapest is often not the best. One more practical mistake is linked here. People do not check how much future flexibility there is while taking the policy. If they later want to move to a better policy, how smooth will portability be? According to 𝐟𝐸's 2024 Master Circular, in portability, the policyholder can transfer accrued benefits such as waiting period credits, pre-existing disease waiting credits, no claim bonus, and moratorium period, subject to applicable terms. That means if you have taken the policy thoughtfully and maintained continuity, then future options remain open. But if you took random policies, dropped them in between, took breaks, or did not maintain renewal discipline, then those credits may weaken. Now just look at a common middle-class family picture. The earning member of the house thinks, I am still young, I do not have any disease, office cover exists, premium should be kept low, we will see later. The spouse thinks the insurance document is lying somewhere in email. Whenever needed, they will find it. The parent's small illnesses are treated as normal. The proposal form is filled in quickly. No one reads the terms. Then one day hospitalization happens, and only then do they understand the real meaning of policy wording, waiting period, room eligibility, disclosure, documents, and the cashless desk. Insurance does not break at that point. The illusion breaks. And many times the price of that broken illusion runs into lakhs. The real wisdom is to not treat health insurance like a tax-saving product or just a formality. It is the family's financial firewall. While choosing the policy, think of the sum insured according to real-life medical inflation. Read the terms and conditions. Disclose pre-existing diseases and medical habits honestly. Treat employer cover as temporary support, not permanent protection. Understand the conditions hidden behind a cheap premium. Network hospitals, claim support, sublimits, copay, waiting period, restoration, daycare, no claim benefit, room category. Look at all of these as part of your overall protection. And the most important thing, while taking insurance, ask yourself one question. If an emergency happens tonight, will my policy truly stand with me? Or will it just remain lying in a file? Because the real value of health insurance is not decided by the premium, but by its usefulness at the time of claim. Only the right decision taken before illness prevents regret after illness. Otherwise, very often a person standing outside the hospital keeps thinking only this. If only a little more wisdom had been shown while taking the policy.
If this video has taught you something new, or if you feel this information should reach more people, don't forget to like and share the video. Your small share can become valuable and useful information for someone else. If you have any questions related to this topic, or if you would like to share your opinion with us, be sure to write in the comment box. We read every question and suggestion from you, because your feedback inspires us to create better content. And if you want to keep receiving such interesting and reliable information about business, the economy, and the world in the future, then don't forget to subscribe to our channel GRT Business and also press the bell icon so that you get notifications of every new video directly. At GRT Business, we always strive to provide you with accurate, balanced, and reliable information. Our news and analysis are prepared based on information obtained from various news agencies, public sources, and public opinion. We make every effort to verify and validate each fact as much as possible. But in case of any possible error or dispute, the responsibility lies with the respective sources. Our only aim is to present you with a correct and trustworthy perspective so that you can understand any topic better.